Hey, welcome back everyone. It is time for another red hot covered call video. That's right, seeing the world through my eyes. And that's what we're gonna do today. Today I'm gonna show you some of my recent trades, and some of them are good, some are not, but the important thing is we're gonna talk about them. You know, I was watching Kramer this week. He's talking about taking profits. Should you be taking profits from your 100% gainers? Look, I don't know who he's talking to, but for most people, you know, we're buying into this stock market rally, and what has happened is the floor has come out from under us. Now, we're not talking crash or anything, but it feels like a crash when you were putting money here at the top and now it has fallen off. Nobody really knows why it's fallen off, although we've talked about this before. This is how the stock market works. They buy them up to sell them off to buy them up again. But right now we're left holding the bag. I mean, I'm just like you. I bought stocks higher when I probably shouldn't have, and now I'm left holding those stocks. I mean, hell, my Alibaba trade, right? I got into Alibaba at 174 and I have to manage that bad trade. But I managed that trade successfully and emotionally successfully because I've had my experience. See, this is not my first rodeo. I have been here many times. So that is one of the keys. I mean, I know it's kind of mushy and you can't really get your arms around it, but the reality is we're not pro stock market traders, right? In fact, a lot of people will pay gurus for those pattern trades that they always claim they have $1 million students. Look, at the end of the day, no guru is going to reach down, grab your hand, and pull you out of the wreckage that is our bad trades. We have to be able to manage it. And hey, we have to be able to manage it emotionally. I talked to my buddy Larry, and we talk all the time about where the stock market's at. And he'll ask me a question, and usually I answer that question not from a technical standpoint, but more of an emotional response. Because right now it's hard to make good decisions because you wake up every morning, the markets are red. Hell, if you're trading in stocks like Adobe, Nvidia, man, you're down 14, 15 bucks even before the stock market gets going. So you have to keep those emotions in check. And today we're going to talk about how I've handled some of my most recent trades. And I think you might like it. Now look, before we get going here, if you haven't been to my website, CPTDashboard.com, I want you to go there because I offer up all these free tools. I don't charge you nothing because look, at the end of the day, they're spreadsheets, okay? Anybody can put together a spreadsheet, but the way I put them together, it helps me manage all of my trades. I keep the numbers in front of me so I know when I'm profitable. If you're going to be like me and we buy a stock and we make multiple trades where we might buy back our options or collect a dividend, or maybe we actually add to our cost base, we need to know when we're profitable. That's why I created all my spreadsheets, and I hope you go to the website and you use them. I don't charge you nothing, and there's no hooks. Now, before we get going, if you like what you're hearing at the channel, I want you to subscribe to the channel. It's right there and it's free. And if you like this video today, I want you to bang that like button. It lets me know you like what I'm doing. Now, what we're doing is this. We're talking about managing bad trades. And look, I've already done a video called Managing Really Bad Trades. So after this video, I want you to go back to my YouTube channel, click on videos, and it's right there. In that video, we talk about managing a really bad trade that I recently did. So I want you to watch that. And more importantly, though, I want you to start your building blocks of your financial education so you get that courage or you get motivated to go out, open up that small ball account, and you do your first trade. I know that seems ridiculous to try to do this in these turbulent times in the market, but as history has shown, the markets go up and they go down. You just have to find yourself in the game, because if you're not in the game, then you can't experience the success that we always talk about here at the channel. Now, before we get to those trades, let's talk about some of that success I'm having, because when I show you bad trades, I definitely want to reinforce that this strategy of writing covered calls and selling cash secured puts is successful. And we just have to manage the trade, manage the emotions, manage the market. Here's what I've done this year, cash on cash, using covered calls and cash secured puts. As you can see right here, the stock market is actually down for the year, but yet with the strategy, writing covered calls, selling cash secured puts, cash on cash, I'm over 21% as of right now with an entire 2 months left to go. This is why I keep talking about the success we could have in the stock market, because for me, it's a winning success. See, I have tried to swing trade and day trade the market over the years, but for me, the covered call strategy gives me the best chance to win. Like I said in the beginning, we're not professional traders, so we have to do the best with what we have to work with. And for me, learning this strategy, giving me this success, and now here are the results. These are real results, and for me, it motivates me to keep going and not get down when the market's down. Now, I'm going to show you a couple bad trades that I have, and your jaw is probably going to drop. Now, do understand that I've done this since the 90s, okay? So for me, when I say I have been there, done that, trust me, I have owned stocks for which I lost 90% of my investment. So for me, these are moments where if I've done my homework and I've picked great stocks, great companies, I just have to have the patience and confidence to understand that through my experience, this too will pass. Now, I know for a lot of you newbie traders out there, this might be the very first time you're dealing with market volatility, and you might be down and you don't know how to deal with it. I'm going to suggest you deal with it from an emotional standpoint first. You've done your homework, the stock has fallen. Look, you have to have discipline. And if that discipline means that you have to sell at a certain percentage down and get out of the trade, then you have to do it. Or if that discipline is that you're going to work the strategy by writing calls or maybe selling cash secured puts as it's going down in the hopes that it goes up, hey, again, work the strategy. What we don't want to do is get emotionally disconnected and just fall off. Hey, I did that with the oil stocks, and for me, that was a disaster. And I made a promise myself I would never do it again. So when you see that I'm down as much as I am on a stock like Alibaba, you have to have those emotions in check. And this is the time. This is the time you have to be solid with your emotions and your research, right? We pick these great stocks. We have to be confident in that. Now, let me show you those 3 trades and how I'm dealing with them and how I'm using market volatility to my advantage. I'm actually making some money in this market, and I want to show you how I'm doing it. Now, let me show you where I'm at right now. So right now I have a cash secured put on Win, Adobe. I have a covered call on Southern Company, Chevron, and I have a cash secured put on Alibaba. So like I said, I'm always active. I'm always keeping the chips moving. You know what I mean? So for me, this is how I'm going to handle this market volatility. I take a stock like Adobe, and I'm going to show you their chart. When they fall and they rebound, I want to use that volatility to my advantage because I'm able to pick up some huge cash secured put premium. And for me, that's like cherry picking some free premium because I know if I play Adobe right, it's going to bounce just as hard as it falls. I'm going to be able to buy that option back, make that quick cash secured put money. Now, in the case of Win, you can see that I wrote a cash secured put on Win at 100. Look, Win has fallen tremendously, and with a cost basis of about 143, if I can get 100 shares of Win right here at 100, and if I feel comfortable that Win's going to get there eventually, hey, this is a great time to put in a cash secured put and ride it out. Look, I got $6 for this cash secured put, so that means one of 2 things. One, if Win turns around from 100, moves higher, I can add that $6 to my cost basis, reducing it. Or I could say, look, that's some quick cash secured put money, and we put it in our wallet. But for me, right now with Win, I'm down, so I'm going to use that money to reduce my cost basis, hoping we can get a green trade out of Win before the end of the year. But look, if not, I'm going to hold Win, and we're going to work Win next year. With that said, if I'm assigned the shares at 100, that would be a bad thing. Win at some point needs to get up off the mat, right? But with that $6 cash secured put premium, I add 100 shares, reducing my cost basis, and I end up getting Win here at $94. Now let's go to the chart so I can show you those 3 trades. I want to show you Baba, BristolMyers, and Adobe. Now I've been playing BristolMyers for years, and I've made a lot of money on BristolMyers from a buy and hold standpoint and by a writing covered call standpoint as well. BristolMyers to me is that nice, mature pharmaceutical company. It has volatility, pays a little bit more in premiums, pays a little more premium than most. So I like that. To me, it's one of those safer plays. See, I'm going to hold BristolMyers whether the stock goes up or down. They pay a decent dividend. Man, it checks all the boxes for a great covered call right for me. Well, I've owned BristolMyers since 2000. So for me, again, I have a lot of experience with it, so I feel comfortable with it. Well, back in February, if you remember when I bought Walmart and CVS Pharmacy, I picked up some BristolMyers when all 3 of them were kicked in the ribs. I really felt like this was an opportunity to get in cheap. Well, it didn't go that well for me. What ends up happening with BristolMyers, as you can see, I bought back here around 62. And what I found is this. I think I wrote one covered call as it was heading higher. And then next thing you know, we get some Opdiva news that isn't that good. And it is just killing me now. Because now when the stock falls from 62 down to the mid 50s, I really have to be careful because when I write my next covered call, it'll be under my stock purchase price. And if my shares get taken away from me, me, it's going to be at a loss, right? Or I'm going to have to use an exit strategy, adding to my cost basis. So for me, Bristol-Myers has just been a buy and hold, sitting on my hand strategy, because again, it's one of those stocks that I'll hold when the stock market's higher or lower. It's a long-term play, and I'm going to hold Bristol-Myers. Well, in this case, very similar to Walmart and CVS Pharmacy, I've had to endure the pain all year as this thing was moving higher. Now, I know some of you are sitting there saying, John, this is a great opportunity to sell a cash secure put down here. Well, there's a certain point, man, where you cannot throw good money after bad money. And understand, I bought Walmart, CVS Pharmacy, and Bristol-Myers all in the same time frame. So I was not going to throw good money after bad just to do it, right? One, you have to have unlimited funds to do that. So what I ended up doing was throwing money at Walmart because I felt like Walmart was definitely going to go higher eventually. And sure enough, it did. I ended up making money on Walmart, but at the time, I had to make a decision. And my decision was to just hold Bristol-Myers. Well, Bristol-Myers sort of catches its footing, and sure enough, it heads higher. And as it's heading higher, I actually get to a point where I am profitable again. See, my cost basis on Bristol-Myers is about 61. When it got to 62x, I'm thinking I can sell the stock here, take my little profit, and we move on, right? This has been a dog for me. I wrote a covered call. I wrote a 65 out of the money covered call, and I ended up picking up 80 cents, and I'm feeling good, right? Well, sure enough, more Obdiva news, and here we go again. So now I'm stuck holding Bristol-Myers again. Now, I'm really hoping this scenario plays out again, where as we move forward, Wall Street seems to put that news on the back burner. We get those brokerages that will see that Bristol-Myers has sold off. They'll consider it an undervalued play, and they'll slowly put a little money towards it. That's what I'm hoping for. And as you can see, look at this. You know, Bristol-Myers is up $1.22 after all this bad news. Yeah, granted, it's down 13 points from where it fell, but there are buyers out there. So now I just need to be patient. I have to be patient, and if I'm patient again, I'll find myself in a good spot where I can sell Bristol-Myers for a profit. So Adobe is one of those stocks I've talked about. To me, they are the Switzerland of all tech companies. They have great earnings. They're in a space that they pretty much have no competition, and they're in the cloud. So Adobe is killing it. And don't you love it? Every time somebody comes out right before earnings and picks on Adobe's earnings, maybe an analyst will come out and say something a little negative. The CEO comes out and reaffirms earnings. Look, this happened last year when Adobe was trading down to 148, and an analyst had come down and said that they weren't going to have good earnings. The next day, the CEO comes out and reaffirms earnings. The stock rockets 40 points. That same thing happened this year. It's unbelievable how this company is confident in what it's doing. I love it. That's why when it falls on heavy volatility, I will look to cherry pick some cash secured profits. So notice every time it falls, and we've talked about this before, I like to come in and sell a cash secured put in the hopes that it rallies higher, and I buy back that option. Now that's what I've done multiple times. And recently I've done it in a big way. Right here when Adobe had fallen and it got a little bit of a bounce and it's trading at 254. I wrote a 30-day cash secured put at 250, picking up $5. Then I wrote a cash secured put at 245, picked up $3. And as Adobe's trading up and down, we get this spike right here. And when it spikes higher, what do? Buy those options back. I buy the $5 option back for $1. I buy the $3 option back for less than $1. We pocket that cash secure put money. We move on. And what happens? Well, the market is still in volatility mode. Adobe peels back off. So sure enough, what I do, I write a 237.50. I get $6 for that trade. And now Adobe has found its footing. Yes, it was down $7 on Friday, but Adobe has found its spot where it may go to 237.50 or may not. But here's the thing. I'm going to play Adobe, but if I get stuck with Adobe shares at 237.50, that is a tremendous value in my opinion. And I'll hold Adobe and I'll look to write covered calls when the market turns around. Now, before I go, I want to encourage you to go back to ctpdashboard.com. I want you to download the newest version of the CTP Dashboard. And if you want to further connect with us off YouTube, all you have to do is click on the Welcome tab at the bottom. You can see it right there. And when you do that, I always post at the top my most recent YouTube YouTube video, a link where you could actually go to the Facebook page and like my Facebook page and join the off YouTube discussion, and I include a link for all the free spreadsheets that I offer back on my website, and I always show you when I've last updated. Remember, we always update the dashboard on Wednesday, so if we're looking to do that weekly covered call, that next week's covered call, we want to own the stock the week before so we get a little premium and a little bit of time value, so it makes it worth it, and we can do those weekly covered calls, making those little crumbs we always talk about. Man, love doing the weekly covered calls. Now, I hope you're handling the volatility of the stock market, keeping your emotions in check and making good decisions. If you have to let this moment pass, you can let it pass, right? Sometimes you just have to sit on your hands, let the choppy waters pass, and then we can get back in the game. It's all right. I'm doing that with a couple of my stocks right now. At the end of the day, the key thing is we want to make good decisions, because once we start overreaching and finding ourselves making bad decisions, that's when we get ourselves in trouble. So if you have to sit on the sidelines, if you have to wait, that might actually be the best decision to make. Hey, look, if you like this video today, I want you to bang that like button. Hang in there. I do wish you all the very best in trading. And until next time, I hope all your covered calls are profitable.
All I see is signs, all I see is dollar signs.